Welcome to CEO Money. I'm Michael Yorba. Thanks for joining us. I've got Barbara Friedberg, CEO of Robo Advisor Pros, on the show with us today. Barbara, welcome back to the show.
Hey, it's so nice to be here with you today, Michael.
All right. The markets are in the 9th year of a bull market. Is a crash coming?
The short answer is absolutely yes.
Okay. Walk us through it. What should we do with the cash? What should we do with the portfolio? What robo-advisors do you think are most equipped to handle the pivot in the markets?
Okay, that's a lot of really good questions. Yes, we are due for a crash, but the problem with that answer is we don't know when. So you're in a really, investors are in kind of a tough situation now because we could see another couple years of a bull run. So the question is, do you want to do anything drastic with your money, or do you just want to have a plan that you're gonna stick with through thick and thin? And that's my advice if you're a long-term investor. If you want a robo-advisor that might be able to tweak your portfolio a little and does some active management, QPlum is a really interesting robo-advisor that is actively managed, that uses AI technology. So they kind of buy and sell and have a little bit of a finger on the pulse of active management robos.
Got it. Yeah, they have been on our show. All right.
Oh, they have. Awesome.
They have. Yeah, as a matter of fact, now that you mentioned it, I'm going to ask them to come back and talk to us about what they think is going to happen. But staying on topic with you.
Yes. Yes.
Last question. Let's say that people decide to take a few chips off the table. They think maybe I'll start selling out as the market is rallying versus running for shelter after it's already happened. What are you thinking is a good place to, or a good thing to do with your cash?
Okay, I think that is another awesome question, Michael. And I have to admit, although all of the data says stay with your plan through thick and thin, even someone like myself who's been in the financial industry for decades, I get anxious and I tend to take some money off the table and go into safer investments that are going to protect my cash a little more. You know, is it the right or the wrong thing to do? I do it for my own psychology. And where I put some of that extra money that was formerly in equities, right now you've got kind of a new development in contrast to the past few years in fixed income investing. And that is interest rates are going up. So instead of just having no place to put your money because interest rates are at 0%, you have options. So I would say ladder up. And what that means is you buy either bonds or CDs of varying maturities so that you can capture the rising interest rate environments. For a 1-year CD, you can get 2%. For a 3-year, you can get close to 3%. So buy a couple of CDs or bonds of varying maturities, and that way you can shield yourself from the impending stock market crash whenever it comes. And also, you can get a little bit of a better return on your cash.
Got it. Good advice. Barbara, thanks for being a guest on the show.
My pleasure. So much fun.
Mine too. All right. You've been watching CEO Money with Michael Yorba. Thanks for joining us. Like us on Facebook, follow us on Twitter, and subscribe to our YouTube channel.